That's just so big that I just can't. It's, for me, thank you.
I think this goes directly to the point that Director Maharan was making when the analogy to the authority to issue up to $4 billion worth of power bonds, and we only issue power bonds with prior notification to the Finance Committee. In this case, the $4 billion, $3 billion of that is just a request to term out short-term debt or maturing debt that we have, so it's not incremental debt. And then approximately $1 billion of new debt, which is associated with, as Bill said, this the investment in nuclear that's going on. So overall, we're asking for a $4 billion ability to issue power bonds, and we would expect to end fiscal year 14 with $25.9 billion worth of statutory debt. And so I mentioned a bit about the, one of the risks that we bear in this plan is obviously the weather that we've seen certainly played out over the last 2 years. Commodity prices and the volatility of that, we do issue fixed price purchase contracts. From a operating cash flow perspective, so you can see about roughly $2 billion of operating cash flow and $3 billion of investing. We anticipate ending fiscal year 14 with $1.2 billion worth of cash. And then the recommendation is that you would approve this budget, which includes $10.5 billion of aggregate revenue, the operating expenses and capital spending included within that, the purchase power and the fuel and purchase power plan, which is our ability to execute contracts underneath that, the rate actions, which includes an extension. We had an environmental rate rider that had lasted for 10 years, and it's set to expire at the end of this fiscal year. And so we're asking for an extension of that for 5 years, and that's included in this plan as well. And then an effective retail rate increase of 1.5% is included in those revenues that I showed you. And then lastly, for the authorization on the financial shelf to be able to issue up to $4 billion of power bonds. As we're seeing in the 14 budget are reduced, and the obligation of us is to be more efficient, more effective, and to live within those means. And then net income, which has certainly been stressed as a priority for the board, in that this demonstrates that we will be meeting our long-term obligations, and that the generation of net income would be used to extinguish the debt that's been shown in the previous financial plans that I mentioned, directly in line with that plan. And then total financing obligations, where we'd see the manifestation of that overall financing plan that we had discussed. Then jobs created and retained in the Valley, in roughly 21 million.
That's just so big that I just can't. It's, for me, thank you.
I think this goes directly to the point that Director Maharan was making